Hi everyone, this is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If you're brand new with us this week, welcome. Give you a quick rundown on how TradeFinder works. First of all, if you've seen any of our videos, you know that we have to go through this disclaimer. It's one of the requirements of putting out content of this kind. And a couple things that the powers that be want us to make you aware of. Number one, we're not registered to give individual investment advice in the United States. And two, because we have a lot of international viewers and a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Other than that, again, please take a screenshot if it's the first time you're seeing it, read it in detail in your leisure. The way TradeFinder works is we'll do a brief market update. Not a whole heck of a lot's happened since last week, but a few things to talk about. Then we'll do a review of any recent closed trade alerts with Elliott Options, give you an idea of how our trade alert service works. Then we'll take a review of past case study considerations that we've done within TradeFinder. Then we'll look to see if we can find a current case study consideration for this week with TradeFinder. And then with whatever time's left at the end, we'll do a general Q&A. So hopefully that gives you a good rundown of how things will work. So in the end, just to let you know, normally the general Q&A, there is support on here if you have a support related question, but towards the end tends to be more related to you guys giving us your favorite stock symbols, and we look at what our indicators are sharing with us. A couple of housekeeping things that I thought you might be interested in. Now, if you take a look here, I don't know if you can see this or if I need to reshare. We have a store open by popular request. A lot of you have been asking for having things available for our store, and our store is available at, you saw the little merchandise there, right here. We've had some fun with it, with all the comments about Chuck Norris, etc. So it's at EWOTrader.store. So EWOTrader.store, and you can pick up some Elliott Options merchandise, shirts, all kinds of stuff, hats, and things are there for you. So please visit that if you'd like to. Again, I think you'll get a kick out of just seeing what we've come up with based on some of the comments that you guys have placed here and on YouTube, etc. So it's pretty fun. All right, so with that, we'll move into where the market is right now. You can see that we did finish to the downside today, pretty much reverse what happened yesterday. So we're right back to where we were 2 days ago. That's kind of been the theme. The market's gone nowhere. Basically, we go all the way back to the 16th of April, and the market closed at 417. We closed at 424. So for 2 months, we've moved 7 points on the SPY. So just basically nothing has been going on in the market. You can see that the wave 5 is extended 162%, still at that 161.8% fib extension level on the wave 5. Showed you numerous times the old 420 target, but then we had the newer target, which is here at 426. Now, what I did want to share with you is we did hit 426 last night in the futures. So we didn't hit it during the trading day today, but we did hit it in the futures last night before the market opened. And the reason that I say that is normally the level actually gets hit, and you can see that these two levels came awfully close. So we had a high of 425.37 yesterday, a high of 425.46 today. So we haven't touched 426 in the actual trading hours of the market, but we have touched it in the futures in the overnight hours. So we're getting awfully close to that level. So what happened once we finally get there? Some people have asked about that on YouTube as well. Well, there's the 261.8% extension that we've been talking about. I would be surprised if we go there, but hey, anything is a possible move to the upside at this point in time. We'll be doing a SPY update later on this evening. So please take a look at that. I'm going to show you some other things that tie into where the market may go from here, which are interesting. But one other thing that I wanted to share with you is One of our subscribers actually made mention of this in our last insiders meeting. Our insiders meeting is what we have for our subscribers. It's on Thursday nights. It's for our subscribers to the alert service only, and they get a chance to ask questions, and same general thing as the Q&A with symbols, etc., or whatever questions that they want to ask. So we do that live every week. Our subscribers have a chance to ask a question verbally if they would like to, or in text. So looking at this, there's a new zigzag, and this is the third level of zigzag, right? So we already had the big one, which moved to 420. The secondary one is the one that is 426. This is a tertiary, if you will, zigzag. So this is the third layer. And so does it carry a lot of weight? No. Is it something to take account of? Yeah, because if the market is able to break above 426 with any sort of follow through, then there's probably going to be a little bumping of the head at 433. Does that mean that it'll stop there? Now, again, I don't think that this is going to carry a whole lot of weight there, but it's something to note that if we break above 426, maybe we stop here and pause at 433. In other words, the move to the upside from here could be measured. We bounce up 433, then we bounce to 444, which is the 161.8% extension of that little zigzag. Then we go over to the 261.8% level of the bigger zigzag at 452, and then all the way up potentially to 460. But those are both 261.8% extension levels, which don't happen very often. They do happen. They happened in 1999. They happened in 2007. So you can see that they happen when significant things are occurring in the market. But at this point in time, I'd be surprised to see if we move that far. We'll see how things play out. So we kind of want to see what's going on with the DMI. Now, this is interesting because the ADX is starting to curl up. But if you take a look, the ADX has been down around 13, which, if you're familiar with anything that we do with our Strangles, which I'm going to show you something in a minute here, is a great opportunity to be placing Strangles. That's what we've been doing a lot of for our subscribers. It makes an awful lot of sense right now. I'm going to clear all this stuff off here and show you something that's quite interesting that may make you a bit more interested in the Strangles themselves. But when you take a look at the market moving to the upside, those are the targets. But look at the positive directional indicator moving down as the market moves slightly higher. Negative directional indicators diving down. ADX is curling up. I use the analogy of a volcano quite often, where you look at the volcano and you don't see a whole lot. You just see this big mountainous thing. Then underneath that, there's lava, and the lava is bubbling, but you can't see that from the surface, and we don't know, when the volcano is going to blow, but we can say that there's rumblings underneath there. That's what happens when the ADX starts to turn up, when you're still in a consolidation with the chart. Doesn't have to be the market. An individual chart is the same thing. So let me show you something that's pretty interesting right now. So I'm going to take this off, take all these zigzag patterns off, and let's just take a look at the market itself. So look here, and you can see that, and we have a educational section on our website. If you haven't visited it, please do so. EWOTrader.com. I'm going to show you that here in a second. But we talk about diagonals. There we have a section on diagonals, and look at that movement there. Does that not look like that's potentially a diagonal? Now I'm drawing these lines by hand, so this isn't any sort of a computer program that's doing this, but this looks an awful lot like a diagonal to me. And the question is, do we get a blow off top, which can occur in an ending diagonal? Is it an ending, or is it a beginning diagonal? Hard to imagine it being a beginning diagonal when we had this big, huge move to the upside, but that looks pretty interesting. That looks like 5 waves within that diagonal pattern to me. So I just think that we continue to add things, and we get to the point where frustration mounts, right? When the market doesn't move, especially when you're long option traders as we are, and you want the market to move, and it just simply doesn't. And that becomes frustrating. But you get to that max pain point where you're ready to say, that's it, I've had enough, I can't do this anymore. As you're watching the time decay tick away day after day. And when you get to the point where you're about ready to throw in the towel, you can't do it anymore, that's when things turn. It happens. It's psychology. It happens all the time. And maybe you've had this happen with you before. Maybe you were in a trade and you were losing money on the trade and just couldn't take it anymore, and you closed the trade out. And then the next day or two after that, stock turned and went your direction. I'd be surprised if everyone listening hasn't experienced that at some point in time. That's that psychological max pain that I was talking about, where when you get to the point where you're ready to just give up, throw in the towel, this market isn't going anywhere, I don't want to trade directionally anymore. And then that's the time when you need to put more money in because things are getting ready to happen. That's just the human element of psychology in the world of trading. That's what makes Elliott Wave so great, is it's analyzing that. And so what we've done with our Strangles is to take advantage of when you're getting to a point where this consolidation has gone on for so long that you really can't take that anymore. Well, we've set up a way that you can profit on movement from either direction in the market. So if this is a diagonal pattern, and it doesn't even matter if it's a diagonal pattern, you could see that the ADX had gotten down to 13, which is really low. That shows you the market's been consolidating. So I can draw this triangle or this diagonal pennant pattern, whatever you want to call it, all I want. But all you need to do is look at that ADX to know that the market has been consolidating. The ADX gets down to 13. Pardon me, the market has been consolidating. So what I wanted to share with you is here on our website, if you go to this section here on news updates, and I'm going to ask the support guys to put this link in for you. If you're interested in knowing more about our Strangles, all you have to do, you don't have to sign in, even if you're not a subscriber yet, just go to ewotrader.com, click on the area that says news updates right here. And then right here, it says Strangle Mastery Perfectly Explained. Click on that. What that's going to do is bring up this video. It's a short 5-minute max video that goes through and talks about what we just completed, which is a Strangle Mastery class. Now, in the Strangle Mastery class, we do go through, as you can see on the screen there, we do go through and show you the technicals of the triangles, the way they're set up, how they profit when they move, but it also goes into the math, delta, gamma, theta, on how we set these strangles up to make sure that when the market does move, we are mathematically guaranteed to make money as fast as possible. We still need the market to move. That's still a requirement. The market has to move, but if it does move, we're mathematically guaranteed to make money as fast as possible. It's unique. Publishers have contacted me. There's a book out on it. Strategy is to be careful about saying proprietary. You don't know what people were doing 30 years ago. But as far as I know, nobody else does it exactly the way we do. So again, if you want a brief rundown of it, you can click there. Now, because this is really a hot time for when the market could move, just click there. On that, it'll bring up the volatility strategy here, the Strangle Mastery class. And then you can move down and you can see right here, click to take up the offer. So once you've gone through and had a brief update of how the Strangle Mastery class works, if you want to come down here and take up our offer to subscribe and get that class for free, the full Mastery class, not the 5-minute video, that just explains it, but there's a Mastery class that's 2 sessions long. And then tomorrow night, so this is the reason I'm going through this tonight, tomorrow night, we're going to do a practical application and live Q&A on the Strangle Mastery class. So you have a chance to sign up tonight. And if you're here, if you're listening to this, you're watching us tonight, if you click to take up the offer, if you click on that button right now and put in the code VS for Volatility Strategy 10. So VS 10, that will give you 10% off further. So just spend a couple minutes going through this. If you have interest in it, again, come down, click on take up the offer, put in the code VS10. That'll give you 10% more off of the price, and also give you access to being on the live Q&A question and webinar, tomorrow live Q&A webinar, you meant to say tomorrow night, where we'll go through this in detail. So I'm spending a few minutes on this because I think it's just really incredibly important with where we are in the market right now with this. We were asked last week, when you have a breakout, I think one of our subscribers asked this question, so it was on a Thursday night. If you have a breakout on the market, do you get a lot of breakouts of triangles on individual stocks? And the answer is yes. Usually it's like the floodgates open because we have a lot of consolidation patterns with the market as well. You know, from being here at TradeFinder, we have several here that we're going to go through in a few minutes. So if you have a number of different triangle setups, and the market itself breaks, yeah, it's like the floodgates open. They all start moving. Everything starts moving. So the key here is that we came down to 13. We've curled back to the upside. So we tested this low. We've been talking about this for a while. And I mean, we've all been itching for the market to make a directional move. And I think it's going to. So that's what I wanted to share with you. Hopefully you'll sign up. We'd love to have you in the live webinar tomorrow in the live Q&A. Ask any questions that you want, especially if you're newer to the strategy. Get used to it. But basically, general terms, you watch the 5-minute video there. It allows you to profit on a movement without picking direction. We don't care which way it goes. Well, I always say that. We don't care which way it goes. But everybody knows the market moves which way faster, up or down. Down, right? Everybody knows the market moves down faster than it moves up. So if you had a preference, and this almost seems un-American or whatever to root for things to move to the downside, but the fact is you make money faster if the market moves to the downside. But if it breaks to the upside, that's fine too. It doesn't really matter. It may take just a little bit longer, but you still profit in the end. So really pretty interesting with that pattern with where we are. The diagonal that I drew within there. You don't have to have the blow off top. That's one type of diagonal. Again, we have a great educational section on our website, EWOtrader.com, where we went through a number of different scenarios with these diagonal patterns, or what people commonly refer to as pennant patterns, because it looks like a baseball pennant. So I'm pretty excited, as you can probably tell by the enthusiasm in my voice, that I think things are getting ready to move, and we'll see a significant move in the very near future. All right, so let's go back and take a look at the trade that I wanted to share with you. This is one that our subscribers were sent out as an alert. This was on BlackBerry, as you're probably familiar with. So the entry was on May 28th, and here was the chart setup that we were looking at on the 28th. You can see, look at that DMI. That's really good. Volume is moving up as we move to the upside. Now, look, we came down. So the stock finished down near the low, but it also had gotten on the high too far away from the 10-day moving average. You know the rule. What is it? No security in any time frame. It's too far away from the 10-day moving average. By that, that's on one of the shirts in the store too, by the way, because I say that so often. So the guys that created the store had some fun with some of my common cliches. But they're actually rules and not really cliches. But the DMI was supportive of, okay, we got overextended, but we're going to continue to move to the upside. And then we exited it literally 3 days later. You can see this move to the upside here, came back down, moved higher. Now, the reason it says 3 days is that's calendar days. It was one trading day. So this was Friday that it had moved back to the downside. And then on Monday, it moved right back up there towards resistance. So really, in one trading day, made a 46.5% gain on BlackBerry. So Friday to Monday, that was it. One trading day, but 3 calendar days. So I wanted to share that one with you. Here's our mark-to-market graph. Obviously, that's going to be a pretty good one because we were in the trade such a short period of time. So this is what our alerts look like. If you've been listening to these trade finders, if you've been watching the YouTube videos and you haven't subscribed at this point in time, I can't think of a better time than right now with the fact that the market's getting ready to make such a move. But every alert that we send out has a trade ID, the stock symbol, what the strategy is, which of our strategies it lies within, impulse or volatility, whether we are a winner or a loser, number of contracts. That's at the close, obviously, but number of contract strikes. All this information is here. As you can see, there were charts included with the entries and exits. And then we have this mark-to-market. We're 100% transparent. You see where every strategy is every single day. So this mark-to-market graph is updated on a daily basis. So Pretty cool stuff there. Love to have you as a subscriber, especially right now. So let's go back and look at some of our past case study considerations. We've got a few of them because the market hasn't moved, right? So we've got a lot of strangles. We have some directional stuff, but the market hasn't moved. So let's update where we are. So this is SAP, which went back to the 13th of April. And you can see now, well, let's go back to where we were. So we were at 134. And now we hit yesterday, we closed at 145. So that's 11 points. That's better than 10%. Probably a good time to have gone ahead and taken that off. We did move down today. Maybe we're just doing some gap filling here, but it is an ADR, and ADRs tend to have more gaps. American Depository Receipts. If you're not familiar with what that is, that's how foreign company stocks trade on the US markets. They trade through ADRs, basically are designed to mirror what happens on the foreign exchange. So that's, I mean, I don't know. I think we're going to go ahead and close that one off and not talk about that one anymore. So here was CRE. This was on the 20th. And then you can see that, oh, move to the upside and then a big move lower. So kind of a head fake higher. We talk a lot about that with our strangles. So there's a lot of information in that strangle mastery class so that you don't get caught trying to take one leg off too soon. That's a common mistake people make with strangles. So then we had the big move lower. And so we moved all the way from, let's go back to the exact price. We were trading at 103 on the close. We moved all the way down to 88. So if for whatever reason you didn't take that off, you're getting a second chance now as it's continuing to move to the downside. So I don't know how much longer we'll leave that one on either. On the 4th of May, we looked at love. We actually sent this one out as an alert to our subscribers as well. We closed at 60.82 on that day, and we closed down at 57.12 today. So continuing to move lower. The key here with this, and I'll talk about this Thursday night with our subscribers as well, is the fact that we broke that 58 level. There was some support there. You can see where it tried to hold, and it's broken below there. And if we break below 57, then we can look for something significant to the downside. I think that the next support is not till here. So we could easily continue to move lower from this point in time. As fuel costs continue to go up, I had mentioned that I was kind of interested to see which way love broke. Obviously, the airlines, I've mentioned this numerous times in the past. You got to feel for them, just like restaurants. Restaurants can't find people to work, so they used to have to fill capacity only 25 or 50% because of COVID. Now they only fill them 25 to 50% because they don't have staff to staff the restaurants, because we're still paying people to stay home. But with the airlines, you know, they had the issues of blocking the middle seats, et cetera, cutting capacity, and then people start traveling again, and fuel costs have skyrocketed, their main expense. And I wasn't sure if Love or Southwest still did a fuel hedging program. They used to, but I'm not sure if they still did or not. Based on the way the stock's moving, I would say odds are that they haven't. Then looking on the 11th of May, pretty nice triangle on Darling. We closed there at 70, and we're kind of right there. So nothing has really happened. This is a good educational thing, because you can see that we had false breakout to the upside, false breakout to the downside. Well, that doesn't happen. There's no such thing. So what looked like the triangle here, and it did look like a triangle, has, I call it morphing into, if you've got kids, the Mighty Morphin Power Rangers, but anyway, it's going back a ways, into a larger triangle. That's what happens when you have two head fakes. So this is very frustrating. Happens sometimes. Fortunately, it doesn't happen a lot, but it does happen sometimes where the triangle actually forms a larger triangle. So then we have to be a little bit more patient and wait for the breakout. But the offsetting good part of that is normally when you get the larger triangle of breakout, the breakout is more volatile. So it moves stronger. So it moves bigger. So again, you get rewarded for that patience. And then we had Lear also on the same day. the 11th, we closed at 186 there, and we broke to the upside. Now, the high here that we reached on the 3rd of June was 203. So when you're thinking of 186 to 203, that's 17 points. That's getting awfully close to the 10% number. But let's say that maybe people haven't closed this one out, so we'll keep this one going for a while. But I'm going to cross the ones off of here that have moved, but we'll keep this one here just in case. Next, we had Plantronics, same thing. Now this one, big move to the downside, but because of the volatility, that move lower basically got you to break even. So you let it move back to the upside because we know the rules, right? And this also is in our course that when you have a breakout of a triangle, that breakout gets retraced. You had the gap on top of it, but the breakout gets retraced. You don't know when though. That's the cue. The $64,000 question is you don't know when the retracement is going to occur. Sometimes it's immediate like this, but not always. So look what happened. We went right back there, right to the point of the breakout, the point of the middle point of the triangle, and then we headed back to the downside. So what we're going to likely do, we sent this out to our subscribers as well, is to send out an alert to take the calls off and just let the puts run back lower. And then even if we run back and test the lows, but I actually think there's a great chance we come all the way down here, especially if the market weakens to 25. And so we even break where we were before. So that makes that a significantly profitable position. That's the beauty of the alert service, is that we send you out alerts on exactly what we're doing, open, any adjustments, and close. I know a lot of alert service just send out alerts for opening positions, and then you're on your own from there. So that's kind of what we do here with TradeFinder, but this is free. And there's other subscription alert services that only send you out alerts on the entry. We do it for free. So anyway, here's the on the entries. So here's MGA that's on the 18th of May. So this was another strangle. You can see the triangle pattern closed at 96.53. Then we had a pretty good breakout there. On the 4th of June, we closed at 103. So we go back again, 96 to 103. On the high is not quite 10%, 7 points on a $90 stock. So perhaps people are still in this one. And there's that retracement on the breakout. Again, exactly what we showed with Plantronics. We're right. I mean, this is amazing stuff, isn't it? I mean, you got to learn this strategy. It's really cool. So we'll see if we break back to the upside from here after the retracement. If you do start to move higher, that's a point in time where you can take the puts off, or maybe that was a head fake breakout and the big move is going to be lower. So you have to wait. You wait for a significant move. So we'll keep this one alive and talk about it next week as well. Then on the 18th, we looked at KBE. We've had a lot of financials, which makes sense. Interest rates, talk about that in the recording tonight, the new SPY update. But you can see here that, and basically what we did was we had so many on the searches that were in the banking and financial sector that we just went ahead and did the ETFs. So this closed at 54.51, and we're starting to break to the downside, which if interest rates don't turn and head back higher significantly, very difficult for banks and financials to make money. They need that spread. So they need the spread between their short-term borrowing and long-term lending. That's how they make money. And if the interest rates and the spread starts to collapse, it's hard for them to make money, and you could see a continued move lower. So that one's starting to set up and look pretty well. So here's SeaWorld that was also on the 25th at 54, and it's breaking higher. It moved up and closed at 57, still not 10%. So we're moving back down here. We'll see if this is retracing the breakout. Hasn't quite gotten there yet, and see if we move from here or not. WBA, which is Walgreens, 54, and there you can see, without going through the false breakouts on both sides, clearly the fact that it formed a larger triangle. Same scenario here, bigger triangle, more volatile when the breakout occurs. You get rewarded for your patience, and just stuff is so just getting ready to happen. So here's the XLF for the financials as well. Closed at 37 back on the 25th of May, and we're right at 37 now. So it gave a little bit of a head fake there. So here was the top, but that really was not a convincing breakout. And now we're back down, looking like it wants to fall and move to the downside. Then we had ASIR. We tried a couple on our momentum scan, which we were looking to see if we were going to get a continued move higher, see if some of these money was moving into some small caps. So we thought we would try a few. We did 3 of them. So I'll go through them real quickly. So here's ASAI, which was at 17. Well, that one's moved lower, but you've got a wave 4 that's been labeled now at 30%. We'll see how that plays out. But the entry was back at 17, and now you're at 16. So it's only $1 lower, even though it looks worse than that on the chart. So we'll take a look at the DMI. We had a cross between the negative and positive directional indicators. This could be one that you just say, all right, that one didn't work, and walk away. I really think in all the months that we've been doing this, I only remember one, maybe there was one other losing alert that we've, case study considerations, I should say, that we've discovered in TradeFinder, that we say, okay, just take the loss and move on. The record has been phenomenal. And if you go back and watch the past TradeFinders, we've had people that have subscribed because of that, because they said, wow, the record on TradeFinder has been pretty impressive. But then BTU, you can see that one was at $7, and boom, this one's broken nicely to the upside. So that's what you want to see. That's more than a 10% move there. Even if you didn't catch the close that occurred on the 11th, still another chance. We were a little bit overbought there. Look what happened. There's that 10-day moving average coming in again. Look at that. Tap the 10-day moving average on the low, and some may want to stay and see if this goes up to that 12.5 level. It could. That ADX is getting awfully high though. The positive directional indicator is moving lower, but you would imagine that with these down moves. So with this, what I would like to do is I'd go back and see, okay, there, even on that high there with the separation of where the stock was trading in the 10-day moving average, the ADX was outside of the positive directional indicator. So when you saw that, that should have been your ticket to get out. That's what you're looking for as far as an exit. You're overbought from the 10-day moving average. The ADX is above 40. The ADX is above the positive directional indicator. All the signals are screaming at you that the strongest part of this move is over. You're being greedy if you hang around any longer. And then PBR, we sent this one out to our subscribers as well. You can see we closed at 1060, and now we're up to 1170. So it's moved up over $1. So that's been a pretty nice move there. So we'll keep that one going. We haven't quite closed that one out for our subscribers yet, so we'll keep that one alive. But we're starting to cross a few of these off, and then we've got all these strangles that are getting ready to go as soon as the market does. Then last week we looked at NVO. You can see that was at 82.28, and it's up to 84.57 now. So that was a directional move to the upside. It's consolidated, so it had a couple nice days and it's gone sideways. So then we look to see, is the 10-day moving average caught up? Almost. Got a doji today. Maybe we need to come down and fill that gap. If you haven't followed this one yet, it's a bit overbought right now, even though it's gone sideways for 3 days. Let that 10-day moving average close that gap just a little bit more, but there looks to be a lot more room for this one to move. Then we look at the DMI, and you can see, yeah, the ADX is getting up towards 40, but it's still below the positive directional indicator, even with this consolidation. That's pretty strong. You get a little bit nervous about the ADX being that high, but there's separation with the positive directional indicator. It's even trying to curl back up with sideways days. I think you could see some more movement here. So we talked about Google and wanted to see it break above this area here. And look, it tried today. So we've got a out of the money butterfly ready to go for our paid alert subscribers, set up with where I think the stock is likely to go, but didn't like that close today. The open got really interesting because we opened above where we needed it to break, but then we closed back on that line. So I want to see it break that level first. And then if it does, then we would put on an out of the money call butterfly, let that run. Google's great for that. And if you haven't heard me talk about this before, Google's my number one over my career as an option trader. I've put more trades on Google than any other stock symbol, specifically since I've been trading Elliott wave, which goes back to 2001. So I'm pretty excited about anytime Google shows up on the search. I'm pretty excited. And check this out. Did you look at this one from last week? 465 on Intuit and moving to the upside there. Even with today's downward move, we're still at 470. We're at 476 yesterday. You look at the 10-day moving average. Yeah, we were getting a little bit overbought there. It's hard to imagine with where this stock is now that it doesn't reach the 500 level. Maybe even hits this midpoint of the tap box here, time and price projection. By the way, if you're not familiar with this software, this is called Profit Source. Is created by the Hub organization, but profitsource.com is where you can find out more information on it. To me, it's the number one Elliott wave software out there. I've tried all the ones that I'm aware of that exist. So I hesitate to say I've tried every Elliott wave software. Maybe I haven't, but I've tried all the ones that I know that exist. And to me, this is the best one that's out there. And you can create your own searches, customize things. That's what I've done. You'll see in a minute where they've been good enough, the folks at Hub. In fact, let's just do that now because that's the last of our past ones, to create an avenue for our alert subscribers where it says Elliott Wave options here on the left-hand side. All the stuff above that, everybody gets. Anyone that has Profit Source gets all that. But if you're an Elliott Wave options subscriber and you have Profit Source, then you get access to all this other information below. The momentum scan is still in beta, but we've been sharing some of the results of that with you. PTU for one, PBR is another one from that. But these EWO, bullish corrective, bullish impulse, consolidating, those are my personal searches that are included in here as well. These other ones are things that with our system, you might be interested in using. The ADX moving up, bullish and bearish wave threes, and the directional indicators crossing positively or negatively that you might want to work into some of your own systems if you have your own indicators that you really like. Now, this is interesting to me that on the momentum search, there's 4 results. Based on what the market's been doing, hasn't really been a momentum move in the market, but we have a few to look at. So let's just take a look at them real quick. I can already tell you that with 199 in the consolidating stocks, I'm going to be more apt to move there. You can see there's only 2 in the impulse side of things, but let's just see if there's anything here that looks really good. Ring Energy, talked about this one in the past. That actually doesn't look bad. The DMI is setting up to be pretty supportive. The CCI is really moving to the upside there. The issue that we would have here is that there's resistance right here. So we need it to break above that. The DMI is telling you there's plenty of momentum here. It could break above that and run further if it wanted to, but we need to see, look at that extension there because it's such a low dollar stock. You get, these distorted numbers with the extension levels. But the key is for me, as good as that looks, I need to see it break above 3 first and then continue to have that DMI. But all the signals look like there's a great chance that it goes ahead and does that. We look at, here's another energy one, kind of along the same lines as, oh, wow, look at that DMI. That's really good. Now, look, the CCI is a bit higher. We're getting into a point where we might have little bit of resistance, and there's still some room for it to move. The key here, though, different from ring, is this one has broken that area. That actually looks really, really good. I'm going to go ahead and put that one down, even though I want to look at a strangle as well. But VET, let's check the options and see if there's enough strikes available to do something with this before we get too excited. See what we have. Yeah, see, that's where we start to get into a little bit of a problem, isn't it? But the spreads aren't wide, though. There may not be a whole lot of choices, but the spreads aren't wide. Just clicking on my, oh, there it goes. September, they're not wide at all. So we may not have a lot of choices, but the spreads are tight, so it must be fairly liquid. So that looks pretty good. Yeah, so I'm going to leave that one on the list. We're going to look at that one for the future, moving higher, and then come down to STXS. The ADX is only at 35, but it's outside the positive directional indicator. It also has broken above its wave 3 high after sitting there for a week. You can see how the importance of these resistance levels are. Breaking higher, closed at 897, target price is 10. I think I like the VET one better. We'll just stay with that. You can kind of put that one on a watch list if you wanted to. Cross-country healthcare, CCRN, the ADX is outside the positive directional indicator. Now this one is going to go on a watch list because that looks like it's making a nice break higher. Let's see what the volume looks like here. Yeah, see, good volume spike. Had a feeling that there was some volume behind that type of a bar, because that one also broke above resistance. Now let's give this one a day and see if that positive directional indicator can get back above the ADX, but the ADX is nearing 40, so we have to be careful of that. But for watch list, I'm going to put CCRN. So we'll keep an eye on that one tomorrow and see if it can power higher. Let's see where the 5 is projected at 22. So yeah, $4 move. That's good. If it can get that positive directional indicator to confirm this move here. It did move up today, but I want to see it move above that ADX. That tells you that there's more room. The CCI is telling us that there's more room here as well. So we could have something working there. So let's keep an eye on that one and see where it goes. All right, so going to move back over here. I do want to just take a quick peek and see what is on the impulse search. We've had, there's a financial. We've already got plenty of stuff on financials with the KBE and XLF. MMC, we've traded this one for our subscribers in the past, send out alerts on it. And see there's room on the CCI. Looks like we're going through another round on the, yeah, it's a nice wave 3. Another round. Look at the separate. See, this is what you want to see your 2 directional indicators doing. You want to see one going vertically up and one going vertically down. Now, it's not exactly vertical, but it's pretty close. So there's great separation there. The ADX is starting to curl up. Dang, that looks pretty good to the upside too. We may have a few more than I expected tonight because I did want to see if we couldn't find a strangle, but I don't know, maybe we stay bullish and see the charts. You just, when you're looking at charts, you have to just, I'm not going to look at that financial one because we already have to break out, but you follow the charts. That's how technical traders trade. Doesn't matter what you think's going to happen. Your opinion doesn't matter. Market doesn't care what you think. Market doesn't care what I think. The market doesn't care what anybody thinks. The market's going to do what it's going to do. So to be a successful trader, you listen to the market. Unsuccessful traders trade by what they think the market's going to do. And there's nobody out there smarter than the market. Nobody exists that's smarter than the market. So choose to listen to the market or trade what you think. And I promise you, listening to the market would be more successful over time. So what I've done now is I clicked on the consolidating stocks because we don't have time to look at 199 charts. So I said, well, let's look at those that are in a wave 3. So a bullish wave 3 still can break either direction. Doesn't matter. We could look at the bearish wave 3 too to see if there's any, but we tend to get better consolidation patterns out of the bullish side. So what we did was we just knocked 199 down to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we have 10 results versus 199 to look at. And so here's Germany, Eagle Materials. That looks interesting. L Brands looks interesting as well. High yield corporate bond. There's our C World is still on the list. As we're talking about, it hasn't broken out yet. So immediately over here on the right hand side, just to share another trader tip with you. We call these pro trader tips. When you see that this chart is moving tenths of a point, it's not moving. So forget that. You don't want to you can't put option trades on that. You can't make any money off of it. It's not moving. So immediately just forget it and move on. So let's do that. Let's look at Eagle Materials. We have the financials already, so we don't need to look at those. Pretty significant down day today, fell 2%. Look at that ADX diving down. It's a ascending triangle. I've seen better ones though. So we might, pardon me, I think we can probably do better than this. So let's see what's next. This has moved in the past. So this is Sealy, Posturepedic, and Temper. They merge together. The ADX is low. That looks good. So there we go. Great looking triangle. ADX down around 13. That's going to be the strangle that we were looking for. So there we go. So we have VET, MMC, and then TPX as a strangle. Pardon me. Goodness, a dry throat. So that's a good cross session. We have three really good looking charts there. So with the amount of time that I have left, I'll go ahead and take some questions. Charlie says, is MA MasterCard forming a small triangle? Let me clear some charts out of here before the software starts to yell at me that we're out of memory. All right, so let's look at MA, MasterCard. It's pretty interesting. The whole level here, right at 360, is massive support resistance. You can see going all the way back to December, January, even back to August of last year, that 360 level has mattered on MasterCard. See that all the way back there? How many times it's come up towards that level and it broke above it, and now it's just hovering over it. And we have kind of a descending triangle. The issue is that it might even go sideways a little bit longer. Well, maybe not. That ADX is awfully low, down around 11. That does look pretty good. So that's a wave 5 that ended, came back down to the previous 4, and it's so this is classic Elliott wave stuff here. So the wave 5 ended, and we came back to the previous 4, and now we're consolidating into a triangle. That's just Elliott wave. That's what happens. Often that happens. So even Elliott would say there's no way to know which way this is going to go. It could break up or it could break lower. That is pretty interesting. That's a good call, Charlie. Randall said post zigzag, not triangle. Not sure what you're referring to there. Just to let you know on the questions, I don't look at them during the presentation because I get distracted and there's particular information that I want to get out. So I don't look at these till the end. So like if you post a question right when I've said something, I don't see it right then. So when you post a question and you make a comment about, be specific on which chart you were so I can know what the question or comment is and go back and refer to that chart. Again, I'm not looking at those until now, until the end. So just something to look at. Stock to look at, QS from Joe. QuantumScape. And you can see this was a mover in the past. And we were getting lots of questions about this back in December when it was going crazy, and it's gone awfully quiet since then. But even now, see, this is why the ADX rule is in place. Look how long this has done nothing, just gone sideways. And the ADX still is just barely breaking below 20. So, we not only do we need a good triangle pattern, but the low ADX is one of our rules that we're looking for, because when the ADX isn't low, this consolidation can drag out forever. And at this point in time, I still don't think it's a time to enter this one yet. I think the ADX needs to go lower before anything significant happens. We could just continue to churn in this trading range moving forward, which I had something better to say about that. Thoughts on the reverse repo market? I'm going to talk about the financial markets in the recording market update later, so I'll save that if you don't mind. Time, I hope I pronounced your name right. In your trade alerts, do you say open and close the trade at market or with limits? We always use limit orders. When you use market orders, you give the market makers license to steal from you. The majority of the time, if you use a market order, basically you can be watching the bid ask. And you're like, okay, if I'm buying, I'm happy with that ask price, or if I'm selling, I'm happy with that bid price. And you look at it and you click ding, market. You don't get filled at the bid or ask. You get filled at something different because they move it to hit your fill and then they come back. You're much better off if you are happy with that ask price or you are happy with the bid price, do a buy to open at the ask or sell to close at the bid instead of a market order. Well, we kind of like to split the difference a bit. So normally I'll do that and maybe make it a tick towards the ask if we're buying, a tick towards the bid if we're selling. But to answer your question is we do limit orders. Alicia asks OIS. Good one to look at. Oil states, man, it sucks going to the gas station right now, doesn't it? It sure looks like it's going to get any better anytime soon. Pretty nice move to the upside today. Not going to help those airlines, but it's still in a wave 5 to the downside pattern, but it's about to become disqualified. It's just hanging on a cliff here, much of a move higher, and that goes away. And it looks like it It closed that gap today. So tomorrow will be really interesting. See, okay, did it just get up there and close the gap, or can we build from here? That would be the interesting thing to watch there. We look at the DMI, that's telling us that the likelihood is we continue higher. In fact, the DMI is so strong right now, it looks like we're going to come up and test these highs and then see what happens at that point in time. But right now, it looks like at least the double top formation is coming out of OIS. And then we'll do one more, try to limit it 2 per person, so we get a chance to get questions from more people. CLDR. Oh, this is a buyout, right? When it goes like that, that's usually a buyout. Somebody bought them. So I'll go ahead and do your other one, but CDEF, B, CDEV. Nice move higher there. Look at the DMI. So that could go up and hit this wave 5 high. Likely will, because we recently broke above that wave 3 back in March. Problem is the ADX is so high and the positive directional indicator is diving down. Even with the market moving to the upside today, it's telling you this move is running out of gas, at least for now. Maybe it needs to consolidate for a bit if it wants to make another run, but this current run that it's been on, which is this move here, has had the strongest part of its move. Doesn't mean it can't move higher, but you have to be cautious because the strongest part of the move at this point in time is over. Bitcoin, Bill, if you wouldn't mind, I'm going to do Bitcoin. Boy, is Bitcoin just dead right. I mean, just perfect with Elliott wave with the triangle, and just smack in there. Just below 40 right now as we speak, or at least it was when we started the session. But I'll do that on the SPY update, if you don't mind. I'm going to talk about that because holy cow, Bitcoin is getting ready to do something. Absolutely going to. Scott, given some weight, is consideration given some weight? Is a consideration given some weight? Are we buying? Scott, I'm sorry, I'm not really sure what you mean by consideration stocks. If you could be more specific, I'd be happy to take a look. This is the same guy. We'll look at Facebook. Pankaj wants to look at TSM. So we'll look at TSM, and then we'll do Facebook, and then we'll wrap things up for tonight. Just this thing is getting ready to move. Please take a look at that Strangle Mastery class. Just give it a couple minutes and see if you have any interest in it. We want to help as many people as we can. The market's getting ready to move. This is it. We've been waiting for 2 months for this, more than 2 months now, for this to occur, and it's finally about to happen. So Pankaj on Taiwan Semi, look at the DMI. This looks like something might be setting up here. It's not there yet, but you've been around enough, Pankaj, to know that you can't jump the gun, right? It sure looks like that's setting up to be a super good DMI. The ADX is moving up, but it hasn't broken above the negative directional indicator, and it hasn't broken above 20, but it is turning up. The 2 directional indicators are separating. It could be good. We're also at a point of major resistance, though, which has to be taken into account. So here's the thing. If it can break above this level at 125, I think it's off to the races. I think if it breaks above 125, the DMI by then is probably set up, and this thing could fly from there. However, all this could fall apart. There's a lot of resistance there at 125. So there's your key. If it breaks above 125, you can probably go hard long. We'll look at this one. Remind me next week, Pankaj, and we'll look at this one again. But if it can break above 125, it might have something, pretty significant here, but not yet. It's got to get above that level. The DMI is not there yet, but man, those 2 things could converge and have something really significant. All right, Scott, since I didn't understand your other question, we'll go ahead and do Facebook. And just even with all the news and the bad press and publicity, look at that. So this is where you want your DMI to be. So the ADX is broken above 20. It hasn't broken above 25 yet, but remember my level is 20. If you go out on the internet and you read about the DMI, they'll tell you want the ADX breaking above 25. I don't think you have to be that conservative. I think if everything else is set up, at least it's been my experience, that the number of times that with all the rules of the DMI followed, and again, on our educational site, we have TradeScan, which goes through our confirming indicators that we look at, DMI being one of my favorites. The percentage of times when all the rules are followed and the ADX breaks above 20, but never breaks above 25 is so small. Why wait? Because you've already missed a good part of the move. So I like when it breaks above 20. So the DMI looks really good. Let's see, short term, the CCI is not that bad yet either. I mean, it's up there, but there's still a little bit of room for it to go. So Facebook could move higher from here. It's pretty amazing. You can see what happened when it broke above this 320 level. They sold back into it because it gapped up. That's why you always hear me saying, gosh, I wish it wouldn't have gapped, because this is what happens. So it broke above there, but it was a gap up. So I had to come down and fill the gap. And we've turned and we move back to the upside. And, I don't get it from a fundamental standpoint, but that's why we don't focus on fundamentals. We look at technicals. That looks pretty good to continue to move higher on Facebook from here. Is that a precursor to the market? I'm not sure. Apple, we'll look at Apple. Well, all right, I'll do two more. I will do gold and Apple, GLD and Apple, and then we'll call it an A. So GLD, we have a put, we had a call on GLD, which did really well here. We have a put now, which is doing pretty well to the downside. So I was happy to see it break below 175. Tried yesterday, but closed right back up there, but we were able to break it today. So what I want to see tomorrow personally is I want to see a follow through day. I want to see a lower close on GLD tomorrow. If so, because you can see the nature of this arrow that I drew here, how vertical that move was higher, it could be just as vertical coming back down. It's not the 45-degree angles for moves that hold. When it gets more vertical than that, they tend to get retraced or corrected stronger. So today was a good day. And if we can get it to break and close lower again tomorrow, then we're probably at 170 in the very near future. That's going to be a little bit of resistance. Then we come down to, or support, whichever way you want to view it. Resistance on the way down, support to hold the bounce. And, support, resistance are interchangeable terms, really. But so boom to 170 and then again to 165. And if it breaks that 160, so the same stair step that we had on the way up, you can see it is probably going to occur on the way back down. And then Apple, Bean says, look at the triangle on Apple. So let's take a look. And we had a really nice move in Apple yesterday. We came back today, but that's because look where the 10-day moving average is. So let's walk it back a day. You can see there's a breakout day. We take the moving averages off. Here's the triangle I believe you're talking about right there. The problem is that from triangle, you could take that all the way back there if you wanted. From the triangle rules, you want to follow through day, and we didn't get that today. It came back to the downside. Now, it was overbought, granted, but when you're breaking out, the first day doesn't matter. You're just like, okay, it looks like it wants to break higher. But if you don't get a follow through or confirmation day, that means the whole thing could be retraced. We could come all the way back down here to the point and start over again. Now, maybe it turns and moves back to the upside tomorrow, but it's still overbought and it didn't follow through. So you have to be a bit cautious on the break higher, see if it can turn and move back to the upside. Now, if it does continue higher, then Apple is good to 135. And 135, we got more resistance. But you talk about fundamentals, can there be a more fundamentally sound stock than Apple out there? probably not. So thanks as always for your attention. Appreciate it. Hope you found some good information there. Hopefully see some of you tomorrow night in our Strangle Mastery practical application and live Q&A. Have a wonderful night, everybody. Look forward to seeing you again next week.